So you guys know how this thing is going to be. I sent you guys tons of ebooks. I don't think tons, but those that have been following me for a very long time, they know that I have ebooks that I share and that you guys have been consuming. So first things first, I want to appreciate you guys' time for taking your time to come to this class. That is very, very important. I see that some people are raising up their hand right now, and yes, that is how we are going to do it. Questions will be asked based on whatever preference or whatever thing you want to ask, and then I'm going to answer the question as good as I can. Okay. So Mr. Omar has a question for us. Can you unmute yourself? If you can unmute yourself, or just type your question. Or better still, let me do it like this. Then I think Mr. Omar has something to say to us, and you can unmute yourself now. You can unmute yourself now and ask your question. Yeah, good evening. Okay, so like I told you guys, it's going to be more of a question and answer kind of thing. That is why I shared you some of my ebooks, and any part you don't understand in the ebooks, I want you guys to ask me questions on it. And not only the ebook, general questions about trading, psychology, risk management, and so on and so forth. That is why I was sending tons of notifications before you guys joined. Okay, do you have anything you want to ask? Do you want to speak with me? Do you want to add a contribution to whatever I'm doing? Just come to this class, let me hear from you. And that was how I was planning for this class to be. So I have someone here raising up his hand, Mr. Godtime or Mrs. Godtime. Do you have any question for me?
Right. Good evening, everybody.
Yeah, good evening.
We call you TRADEWITHWORLDBANK. Is that
Yeah, yeah, that is my trading name, TRADEWITHWORLDBANK. You can also call me Samuel. My name is Samuel. My real name is Samuel.
okay, boss Samuel?
Yeah, good evening.
So, although I've been really busy though, but every single chance I get, opportunity, I get to log into the group and I see your updates. Like I've been seeing your updates even up more throughout this class. So I want to ask because I don't know to what ends is this class? Is it to build raise traders, build traders from scratch, or for those who are already into trading and make them become better. Because
Yes, the
from what I saw in the schedule, it's a 3 days class. It's a 3 days class.
yes.
And I know better. Forex is something that requires a certain kind of time and process to be able to master it.
Yeah, so I love this question. Now, my aim on this class is that, like I said, anything you have that is confusing you concerning trading, I'm here to solve that problem for you. So, remember, I created a newbies class. I created a newbies class whereby I have tutored some newbies that they don't really have knowledge about Forex. I've tutored them, trained them to some extent, so that whatever we're talking about in this class is not going to be totally new to them. So that is why I've done that already. We finished the class. Now they are now from newbies to amateurs. Now the next thing is to move from amateur to professional. That is the next step. And like I said, this class is for that. It's not like, some people might be thinking, okay, how am I going to achieve something with this class? But the main aim is whatever is disturbing you in the forex market, because I know most people now know how to trade. All right, most people know how to trade. Whatever is disturbing in the forex markets, bring it out. Let's talk about it. Let's discuss it, and I'm going to help you solve it. Then everybody's going to learn. That is what I was planning. Then everybody's going to learn.
Okay, that's safe to say that
Yes, yes. Then whatever is confusing you, let us look at it together, discuss about it, and everybody's going to learn. But if nobody has a question, as usual, I always have content for you guys that I'm going to teach you. So that is why I'm talking about questions first. Anybody that has questions for me, because I believe at least one or two people should have questions that they are discussing or that is giving them problem, something that is disturbing them that they need help on. So I believe people should have something to ask.
Basically, I just have 2 questions for us. Two. Okay, one is more of a question. One is not more of a question.
Okay,
Is these synthetic trades indices now,
okay,
do they respect chart patterns? Does chart patterns, price action, does it really apply to them? Does it really apply to indices? Does it take trades in volatility, jumps, and the like others? Then what's this other question? Then aside that, my other child is basically I have a child now. Probably because I gave more attention to synthetics trading. So they have different lot sizes. So
yes,
being able to have, so I think that has kind of messed with my head. So being able to set my risk properly is a real challenge for me. It's a real challenge for me.
okay. So, literally, your first question is: do chart patterns or do strategies work on volatility?
Does price actions, chart
Does
patterns,
price
and
action work
indices apply?
on volatility indices? Yes, the answer is yes, it works. Everything that you are taught in the forex market, or every strategy you are taught, or every strategy that you know, works on volatility indices. But there are some times whereby some strategies work better on some volatility indices than the other indices. You understand? Like me now, when I was trading divergence, I noticed that divergence works well on crash and boom. Crash and boom. It works well on crash and boom. So, and it doesn't really work well on other volatility indices pairs. So that question is, it all works, but you have to find the index pair that works more actively. Then for the second question, I'll be repeating everybody's question because of the recording. I don't think the recording is capturing everyone's question. So, second question says risk management, right? Risk management. Then let me share my screen. I'm not interested in seeing anybody's face. That's why I'm coming. Don't turn on your video. So, yes. Now, risk management. Risk management is, the risk management is the key. Risk management is key in forex trading. It is very, very essential. Risk management is the amount you are risking in the trade, or the amount you are losing or you are planning to lose in a trade. Then risk management also, those risk management is the mathematics or calculation of your loss before you enter a trade, whereas trade management is the management of your trade after you've taken the trade. So there are two differences. Risk management, so now risk management is the calculation of your risk before you enter the trade. So this means, first things first, you need to set some standards before entering the trades on how much you want to risk or how much you want to lose in the market. For example, you have a $10,000 account and you want to risk, let's say, 1%, right? 1% is it $1,000, like that? Maybe 1% is $100 or $1,000. Let me quickly check the maths. So 1% of 10,000.
$100.
Yes, okay. 1% of $10,000 is $100. Now let's say you have been given 10k account, right? You have a $10,000 account and you are saying, okay, you want to risk just 1%. That means on every single trade you are risking 100 USD. Now it all comes down to how many trades do you want to take in a day. As a good trader, you should not take more than 2 trades in a day. 2 trades in a day, that is the standard. 2 trades in a day and then you are done. So that means in a day you are risking 200 USD. Now, if it's a Profem account, you already know that there's overall drawdown of probably 10% or 8%. So that means also on that 10%, your overall loss is what? $1,000. So that means you are actually trading a $1,000 account, not a $10,000 account, if you want to look at it from that aspect. Or like a real account whereby you are trading the whole $10,000, but prop firm, you are trading just $1,000 from the whole $10,000 because you are giving drawdown, daily drawdown, and overall drawdown. But for me, I work with overall drawdown because I don't believe a good trader should breach their daily drawdown. So I'll be talking about overall drawdown. Then overall drawdown is $1,000. That means on your 1% trade, you should risk or you should lose 10 times in a row before blowing the account or before taking or before losing the prop firm account. And on a real account, it's going to take several trades, right? Like 100 trades or so before you blow the whole $10,000 account. Now there's a difference because prop firm is different from normal trading accounts. Now let me leave the normal trading accounts because I feel like everybody these days use a prop firm account. Now if you are trading $100 and if you are risking $100, that means you are risking, let's say you are taking 2 trades per day, that's $200 per day, and it is going to take you 5 losing trades to lose the account, which is not advisable. Which which is not advisable. Please, someone is disturbing our call. Which is really not advisable. So what I'll do is you can then take 0.5% risk. At that point, you are risking half of the $100, which is 50 USD, 50 USD. That means in a day you are losing 100 USD because you are taking maximum of 2 trades. But this is going to be difficult, right? Because taking 2 trades as a newbie in a day is going to be difficult. But you just have to overcome that. So Mr. Mohammed Rabi is raising his hand. I'm going to attend to you soon. Then you are going to now look at the lot size, right? Because now you've known the amount you are risking, you've known how much you are going to risk to lose the account. Now it all points down to lot size. How many lot size do I want to use? Since you are risking $50 per trade, how many lot size do you want to use? What is my stop loss? This is where the risk management comes in. What is my stop loss? But that is left to you to decipher by yourself, right? Because I'm not trading for you and I don't know the stop loss you are using. But for example, let's say you're using 10 pip stop loss and you are risking $50 per trade. That means you are using what? 0.5 lot size. Because 0.5 lot size with 10 pip stop loss would give you $50 loss. You've settled that, as simple as that. But if you don't know the amount of lot size or stop loss you are using, that is where the problem would be. So you have to know the amount of stop loss you want to be taking on every trade. That would depend on your strategy. For me, I use 10 pips stop loss or 15 pips or 20 pips. I don't use up to 20 pips, but 10 pips. Okay, then you follow it like that. If it's 10 pips stop loss, you are risking $50 in a day, $100, $50 in a trade, $100 in a day. That means you are using 0.5 on each trade per day. That is how you are calculating your risk management. And I want to say that there is really no risk management when you are trading volatility indices. That is one disadvantage. That is one disadvantage of volatility indices. There is no risk management. No matter how you want to, no matter what anybody is telling you, there is nothing like, trust me, there's nothing like risk management on volatility indices. Only,
I experienced it. I
yes,
experienced it. Especially with boom and crash, they don't respect your stop
yes,
loss.
the boom and crash does not respect your stop loss. It will take you out once. It will take you out once. So boom and crash does not respect your stop loss, and it's not always nice. But that is just how the forex market works. Okay, especially volatility index markets. That's how the volatility index market works. It does not respect your stop. It does not respect anything that has to do with risk management and stuff like that. Okay. So I think Mr. Mohammed is still raising his hand. Unmute yourself and ask your question. So I'll be sharing my screen
Good evening.
also. Yeah, good evening, sir. Nice to have you
My
here.
question is that ebook you shared,
Okay. Is it the liquidity ebook or which ebook?
Divergence.
Okay, divergence ebook.
Yes. If you draw trend line,
Okay.
if you draw the trend line,
Yes.
I see it's like rising wedge or falling wedge. Is that the same thing, or there's difference between that trend line, rising wedge and falling wedge?
Hmm. I can I
Any question?
I get your question over there. Now that question is I'm coming. I'm trying. Let me delete this one here. Now that question. Sorry, I'm trying to. But then, so your question says divergence. Let me open my charts now. I believe you can all see my screen, right? I'm currently on TradingView. So for me, I don't see it as rising wage or falling wage. You understand? I only see and I look for divergence. Now let's use this as an example. Let's say this is the supply zone, right? That is the supply zone. Now all I want to see is price do this, right? Then at that third touch, that will be my sell entry. That is what I want to sell from. Once I get the confirmation I'm getting, which is the um, candlestick confirmation. So at this point now, I'm not looking at the market from a pattern angle, like maybe rising wedge or falling wedge, but I only see divergence. You understand? But you can say it is now. You can't say it's a rising wedge or falling wedge until there's another line drawn, probably from here. You understand? But since we are drawing just one single trend line, you really can't say this is a rising wedge or a falling wedge, because you can say it is a rising wedge if it is like this, right? And then you can still say it is a falling wedge too if it is like this or something, you know. So it might be confusing you that which pattern is this? Is this a rising wedge? Is this a falling wedge? But when you're looking at the market from just one perspective, which is the divergence entry that you're waiting for markets to play out from, and you are good to go once you see it. You understand? So for me, I don't really like the idea of using patterns and saying this is a wedge, this is a flag, and so on and so forth. You understand? So that is it for me. Okay. And I hope I've been able to. No, it must. It is not. It is not a must. We use the 1 hour time frame. It's not a must use 1 hour time frame. Depends on the time frame of your entry. It might be 15 minutes. It might be 5 minutes. It might be 1 hour. It might be 1 minute. But in the ebook, I think I gave specific time frame. I'm not. I can't remember. It's been a while I wrote the book. It was this year. But depends on your time frame entry time frame, right? If you are using 15 minutes, you have to sit on 15 minutes. If you are using 30 minutes, you have to sit on 30. If you are using 1 hour, you have to sit on the 1 hour. That is how you get the entry time frame. Depends on your trading style. Depends on your trading style. And I believe I've answered Mr. God's time question well on volatility indices and risk management.
Yes, that's it.
Okay, so if anyone has question, you can unmute your mic and ask or type it in the comment section. So I want to let you guys know about something that's called.
What is the difference between
Okay, what is the difference between?
can you hear me?
I'm with you. You said what is the difference between?
Risk management and money management. Risk
Yes.
management and money management.
Okay, so risk management is a term that we use in forex, right? Money management is also similar to risk management, but when you're talking about money management, now you're talking about every aspect of money. It's not only forex related now, because I also get this question a lot of times as what is the difference between risk management and money management? But now risk management is related to forex. Money management is related to forex and every other aspects of life actually. The risk management too is used in every sphere of life, every sphere of life. But I feel like the term money management depends on how you manage your money. Okay, but risk management, you are calculating the amount of risk you are planning to risk or lose before you enter the trade. Whereas money management is everything, whatever you do with your money when you are trading, whatever you do with your money after you withdraw, whatever you do with your money, even when you are spending it. You understand? So that is risk management for you, for me. So for me, that is risk management and money management. And then Mr. Jerry is asking if I should see it on the higher time frame. See what on the higher time frame? Should I also be expecting it on the lower time frame? Talking of the ebook, which of the ebooks? Remember, I shared two ebooks, which is the divergence and the liquidity in the forex markets. So he said I should assume you are talking about divergence. If you should see divergence in the higher time frame, should I be expecting to see it on the lower time frame? Now, for the divergence, let me explain it again. I think that person didn't get the question. For the divergence should not be used as a higher time frame analysis or as a higher time frame analysis mechanism. You should only use it when you want to enter on the lower time frame. But remember, market and price is fractal. What do I mean by market and price is fractal? Whatever happens on the bigger time frame, you'll still see it on the smaller time frame. So when I say price is fractal or the market is fractal, this means if you see divergence on the bigger time frame, you will see it also on the smaller time frame. But according to what I wrote, your bigger time frame should just be the normal analysis, which is the supply and demand, right? This is the supply zone here, and here is the break of structure, making this a supply zone, a valid supply zone, right? Now, when you want to enter over here, that is when you can use divergence, okay? On this 15 minutes or the smaller time frame, whichever smaller time frame you want to use. You understand? That is how I would do it. But looking for divergence on the 1 hour first, according with the analysis, I don't really do that. You understand? Because what is the point of looking for divergence on the bigger time frame, probably like this, and then still look for divergence again on the smaller time frame when I want to enter? So it's really not necessary for the big time frame. Just use it when you want to enter. You understand? But remember, price is fractal. If you see it on the bigger time frame, you would also see it on the smaller time frame. So don't let that confuse you. Please don't let that confuse you. Markets can be confusing at times when it comes down to multi-time frame analysis. So, Mr. Jerry, I believe I've answered your question well. I believe I've answered your question well. Someone is trying to say something. Okay, so in the absence of anything, so I want to teach you guys what we call order flow, because if you still have questions, you can just interrupt me by the way and just tell me you have a question or drop a comment. I'm going to know. Okay. Now, in today's class, I'm going to be talking about order flow. So let's use USDC as an example. Or GBP-USD. No, let's use GBP-USD. I took a beautiful trade on GBP-USD with my students some days ago, sorry. And it was very beautiful. So I'd love to share with you guys what we call order flow. Okay, so the beautiful trade setup. Let me go to the 1 hour time frame. Okay, I love to use illustrations at first, then I would show you on the charts later on. But I would love to use USDT as an example. I'm not really spending much time here, don't worry. So because I know some people might start sleeping off, don't worry. Then we'll continue tomorrow and then we'll finalize everything by Monday. Now, order flow. Order flow is the flow of the markets, right? That is the direction. That is the bias in which price is headed, right? Now, how can we use order flow to our advantage? How can we use order flow to our advantage? Okay, somebody has dropped something for me. Please, what about the ebook that you sent to us? I've sent every ebook to every every person that worked for the ebook. That is one. Then secondly, I shared another ebook to the group, which is liquidity in forex markets. So I don't know the ebook this man is talking about. So like I said, how do we use order flow to our advantage? How do we use order flow to our advantage? Now, especially when we've missed an entry, because that is literally the best time to use order flow. We use it when we've missed an entry in the markets and you want to look for another entry in the market. Then you use order flow. So for me, I love to trade with demand and supply because that's the most simple and straightforward analysis or way of trading in the forex markets to me, and those that I teach. So order flow is the movement of the markets, right? And how do we use it to our advantage? We use it to our advantage. We can use multiple demand zones, right? We can use demand zones and multiple supply zones, or the smaller demand zones and the smaller supply zones. Now, let's say I'm planning to take a trade here. Somebody has dropped a question for me, I'm coming, or something for me. Now, let's say I'm planning to take a buy trade here, right? And I miss this buy trade. How do I enter again? How do I enter again? It means since I've missed this buy trade and I still want to be sure that the buyers are valid in these markets, what do? I wait for these buyers that are now being created to give me another set of buyers. That is the demand zone. So I want these buyers to give me new set of buyers. That is the demand zone. So that means I want this demand zone here to give me another demand zone that will probably be inside here like this. Okay, that I can use to trade. Yeah, that's what we call the order flow, because at that point you're already sure that the buyers are ready, right? This is when a demand zone is creating another demand zone. That is order flow. The buyers are letting you to be sure. The buyers are giving you peace of mind that okay, don't worry, you've missed the first move. Don't worry, just calm down. We're going to give you another entry for the second move. But trust me, this works most of the time. But sometimes markets might not trigger your analysis. The other things that the market does are frustrate traders. But order flow as mode of entry work. Then order flow as analysis, right? Because we have to. Some people might not want to use it for analysis, right? Some people might want to use it to. Some people might not want to use it for entry, right? Some people might want to use it to analyze. Now, let's say you're analyzing the market, right? You're analyzing from a bigger time frame perspective, and you want to look for where is the next movement. Right? This is a big time frame, right? The price is bullish, and you're anticipating that price will come to demand zone, which has happened, and you are anticipating where price would head to. Probably here, price can continue selling, but you're in the market, you don't know. Then you want to be sure that your analysis is going to be correct. Still the same thing. Let these buyers here give you a nice confirmation of new buyers that let demand zone create a new demand zone, and you can use that new demand zone for your entry. And then on your entry, you can look for demand zone, and that you take the trade. Now you're using it as a bigger buyers, right? This is a bigger time frame. You're using it for the main analysis now, and once bigger time frames like this are shown bigger structures, you already know that you're ready to kill the markets. You already know you're ready to strike. Okay, you already know you're ready to strike. So it's still the same thing, but now one is bigger, one is smaller. You're using this one for your analysis, and you already know that when you're using this kind of thing for your analysis, most of the time, 90% of the time, your analysis will play out. That's why I have beautiful setups like this. Okay, so I'll be coming into the markets once again, but I think somebody has a question for me. Okay, some people are raising up their hand. Then good evening, boss. I'm new here. What are the important key factors that somebody needs to know before you can start trading? The important key factors to know before you start trading is number one, never be deceived by the flashy lifestyle of online. traders. What did I say? Never be deceived by the flashy lifestyle of online traders because it will affect your psychology. That is one. It will allow you to rush. That is two. And it will allow you to overtrade. That is three. And when you fall into the trap inside these three, you have a very bad trading journey. That is very important. Because I'm sure you might be expecting me to say, know how to trade, be consistent. Those ones are very easy. Your psychology is important, and your psychology is the hardest part in the forex market. Your psychology and your risk management. So, my advice for you before you start trading, because I won't say capital now, because now it is easy to get capital. So that advice is no longer reasonable to some extent. Then next question says about the ebook you didn't send me. You said you sent the time I asked me to. Well, I think I sent it to everyone, but I'll come back to you. Send a message to me, and I'll check if you qualify to get the ebook. So give us example of a confirmation you can do. Same here, I didn't send the ebook. Did you do what I asked you guys to do for the ebook? So somebody here is saying you can't hear anything. Please, if you can hear me and see my screen, let me know in the comment section ASAP. Let me know in the comment section ASAP. So confirmation count, are you talking about is this person talking about the other flow I was talking about? If you can't hear anything, disconnect and connect back. So I have a queue here, and I have two people here, so from first to last. So they said Mr. Nana is first, or Mrs. Nana, I don't know. You have a question or you have something to tell me, let me know, or mute yourself and speak. Okay. So somebody says it somehow looks like head and shoulders pattern and it is mostly bearish pattern, just say, talking of the chart you've drawn. Yes, everything looks alike in the forex markets. That is what I want to tell you guys. Because a trader that is trading head and shoulders pattern would always see head and shoulders pattern. No matter what. Oh, I did everything you asked me to do, but I didn't send you a book. Please send me a DM, I'll send the ebook to you. No matter what you are trading, your strategy would always look like your strategy, even when somebody is using another strategy. Let's say you're trading breakout and retest. Now, let's say I'm trading breakout and retest. Everything here would look like breakout and retest. Everything here would look like breakout and retest. I would say, okay, what can breakout and retest should I say? I can say this is a breakout and retest. Right? I can say this is a resistance and this is a breakout and this is price is just retesting. Okay? I can say different things to prove my strategy. You understand? So if you say it looks like head and shoulders, trust me, I'm not even seeing anything like head and shoulders here at all. But if you are seeing head and shoulders, that is fine. Markets always does the same thing. Markets always gives everybody the eyes to see what they want to see. Let me put it that way. So if that is why most of the time, if I would draw an analysis, somebody say the analysis I'm seeing this, I'm seeing that. Yes, because market has given you the eyes to see what you want to see. But market has also given me the eyes to see what I want to see. It is giving me the eyes to see my strategy. It is giving me the eyes to see your strategy. That is why this man is saying it looks like head and shoulders, but to me it doesn't look like head and shoulders. You understand? So, do I offer mentorship? Yes. I think somebody is raising up the hand. So, I still ask Mr. Nana or Miss Nana to unmute themselves, or in the absence of any response from Nana, I would move to Umar, Mr. Umar. Then we can hear from him. Unmute yourself and speak. I'm still waiting. I'll wait for a few seconds. In the absence of any response, I would continue with my other flow. So, because I don't want to, I'm recording this, so I don't want it to be too long and annoying. Let me, no, here's this one, here's this one. How to delete, because I don't want to remove, I don't want it to be like jargons when those that are watching the recording, so I don't want it to be too boring for them. Now let's look at it. Let's look at this on the charts, right? So some people might want to ask, which order flow do I use? Do I use the entry order flow or the analysis order flow? I use the entry order flow because I love to enter the markets when I have missed a trade. You understand? But for my daily analysis is very simple, and it's just very simple. That's what I'll say. I don't want to say too much. Now, right, everybody knows demand and supply. Right, this is a point of interest. Now this is a point of interest, okay, and you are looking to enter a trade. Right, so you are looking to enter a trade. Now, where is the first break of structure? There's a break of structure here, right? There's a break of structure there, but there's also a break of structure here. For me, that's the first break of structure above. That is the break of structure, right? Because at this point of the market, this is a reasonable break of structure. Since there's a low here, low has been created, there's a breakout, right? That is my first entry, right? So let's say market moves too fast and I missed the buy. Market moves too fast and I missed the buy. Now this demand zone here has now created this new break of structure. That is where the order flow comes in. You can see now. Remember, this was the first break of structure. This was the demand zone, right? I missed the demand zone, but did that demand zone give me another demand zone that led to another break of structure? Yes. Now, you know, I've missed this move now. I've missed this move. But now with order flow, I'll show you one disadvantage of order flow now, because everything has advantage and disadvantage. Now for order flow, then I would say, okay, I want to use this demand zone as my entry. This new demand zone that caused this second break of structure as the entry. So that will be my main entry, right? So for me, I love to use midpoints of the charts. I love to use midpoints of that line. Yes. And the second entry would have played out well. You understand? So that was what I did here. Missed the first entry, then I used the second entry, and I got in that beautiful 100 pips trade setup that you guys just saw right now. So that is how I got my setup on my entry. Let me move to US30. There's a lot of order flow there too. Okay. Let me move to US30. Okay, US30, same thing happened here on US30. Order flow, very, very important, very, very clean. Beautiful, beautiful trades, beautiful, beautiful trades. Okay, this one is not order flow, this one is just a normal. Little bits, yes. So you can see my key levels are very sharp key levels. Price gets to my key levels and price reacts. That is how I trade. I trade with key levels and then I use entries with the supply and demand, order flow, and so on. Not even and so on, just demand and supply and order flow, because they are very, very simple stuffs. Now we've gotten to the point of interest. I don't want to show you how I got to the point of interest because, you know, that will be giving out so much information. But I've gotten my point of interest right, and the main purpose of this class is to talk about order flow. Now let's say this is the sell, right? Now I'm waiting for a break of structure after a mitigation of my key level. Now when do I see break of structure? There is a break of structure here, clean breakout of structure, right? So I draw out my supply zone. It's triggered immediately. I was not able to join the sellers, right? Triggered immediately, it left me. Then it's continued selling and broke structure again to the left, right? It broke the structure. Okay, now this supply zone has created another supply zone that broke structure, and I still want to enter with the flow of the movements, right? So what do? I now use the new supply zone as the entry, since the first supply zone has been mitigated and it didn't just start dropping. It dropped a little bit, gave us a break of structure, and we're open forwards. Price to touch it and mitigate it. You understand? So you wait for the mitigation just like that. Very beautiful setup. Get beautiful trade with huge movements and you are good to go. And you are good to go. Just like that. Beautiful trades. And then you target your TP wherever you want it to be. Understand? So for those that love holding, you hold. Because me, I love holding a lot. And that is order flow for you. You understand? So I said I want to tell you guys a disadvantage of order flow. Now, the disadvantage of order flow is just one disadvantage, right? Price might not come back to trigger your position. Price can just continue selling off, right? And you miss the moving train. That is just the word. You miss the moving train, and it can be painful. That is the only disadvantage of order flow. I think someone was trying to talk the other time. So this is another key level of mine. Right? This is another key level of mine, and I've gotten the key level. Like you can see, all my key levels are crazy key levels. I want price to touch my key level and start selling immediately. Either it gives me entry or not. Same thing happened here too, right? We got the break of structure. Supply zone, but price didn't mitigate the supply zone. There is another explanation for this one, and there's another way to trade this kind of setups, okay? But here I'll be explaining only order flow. But for this kind of setups that didn't trigger and mitigate, there's a way to trade them and avoid this kind of trades, or delete your pending order, or know that price will not come back here, because there's a way to know. But for me, I'll be explaining order flow, right? So we got break of structure here, then this is the supply zone. So I assumed I've missed this sell, right? Then I want to sell again. I want to continue the sell. Then I use what? I use the second break of structure. Okay, now that supply zone has given me another supply zone. Okay, and because this is a break of structure here, this is a low. Price has given me another break of structure. So I want to now sell with the new supply zone, but unfortunately, like I said, price might not tap us in, but here price tapped in, because looking at this, let's say I use the midpoints, price won't tap us in, so that is a disadvantage. Okay, so let's say price tapped in and you catch the huge move. The move must be huge, only if there's holiday in the markets. So it must be a huge move. So these are beautiful ways to catch big moves in the markets. Okay, so that is literally it. On, I think someone is trying to say something. Okay, in the absence of any question or summarizing, I would move to Euro card. Okay, somebody has dropped something. So somebody says, what about when you have like 3 break of structure on a row? Which one should you take? Remember, before you have 3 break of structure on a row, you would have seen the order flow. So let's say this is the main entry, this is the break of structure, this is the first entry, right? Let's say you missed it, right? You got another break of structure here. Now this demand zone has created another demand zone, so definitely you're entering on the second break of structure, and if it gives you the third break of structure on the row, you're already inside the trade, over here, right? You're already inside the trade over here because at that point you've used order flow. Then it will now be left to you to say, okay, I want to take the trade on the third break of structure like this. Okay, so now look at this now. So imagine I missed this buy here, right? And I want to use order flow. Look at it, I would have missed the trade just like that because price didn't come back and price has moved crazily, right? Price has moved crazily already. So it's always important to not even miss the trade at all. Then you can use order flow as re-entry, right? You enter here, and then you are done. You understand? So this is just a beautiful style of trading, very beautiful style of trading, and beautiful style of adding positions too. When you've entered the trade, you lock profits, add second position, you lock profits, add second position. You understand? So just a very beautiful style of trading. Let me check. I think someone is trying to say something. Okay, like I said, you should have taken the second break of structure before you see the third break of structure. And then if there's a third break of structure, still with the order flow, you know what to do, right? You would take it, but it would be like the third trade, but it would be like the second or third trade. But let's say you have missed the first setup, right? The first real entry. You missed the second entry. Okay, I've spent 46 minutes with you guys. You've missed the first entry, you've missed the second entry, and then you are now seeing the third break of structure. I would advise you not to take it. Why? Because in fact, at that point, price is already exhausted. Price has already moved. Price has already moved. Let's go back to where was that pair? I think it's GBP USD. If you're waiting for the third one, price might have already moved because even catching the second trade on the order flow, you are just being, lucky. You understand? So trying to catch the third trade, price will have hit TP. Price will have hit TP. I'll not even remember about you. So it's always good to take the first trade, second trade, or if you miss the first trade, then take the first trade with the order flow. That is just the idea. So that is the one to take. Once you miss the first trade, take the order flow trade. If you miss the order flow trade, forget about it because at that point price might just continue buying. And if price does not continue buying, still don't take it because price might just want to play around that zone before moving or before not even going in the direction. Okay, so that is it for you guys, and I'll stop there. So you guys will get the recording. Any questions, please? Any questions? I heard some people in South Africa are not able to join this class, but you all get the recording before tomorrow's class. You all get the recording before tomorrow's class, and I think that will be all for now. Then come prepared tomorrow for your questions. Don't worry if you don't have questions. I always have content for you guys so that those that are trading will be able to use that to step up and use it as a stepping stone for their strategy and for their entry. Like I've explained to you today, I believe you guys learned something. Okay, so somebody says boss of the broker. Let me stop recording my screen. I think I recommended a broker for those that joined my newbies class. I recommend XNES. Maybe I'll send the link to the group. I recommend XNES. If there is a new change or an update, I'll always let you guys know concerning XNES. So that's the broker I recommend. Though there's millions of brokers, but that's one I use. It's fast, it's swift, and that is what I recommend. So I think that will be all for now, guys. In the absence of any questions, my system is running low. So in the absence of any questions, I'll say that will be all for now. Come prepared tomorrow with your questions. Tell a friend to tell a friend, and I'll open the group. Drop reviews. So those that didn't come will know that they missed something. Drop reviews on the group. So I'll open the group. Drop your reviews. Tell your friends, tell a friend. Come tomorrow. Come prepared. catch you guys in the next one. Peace.